Hey everyone, my name's Kaylin Dinwiddie and I'm going to be talking about our capital budgeting for the new Heritage Doll Company. So this is going to be my kind of general snapshot of everything. So you can see that in 2009 we started off with revenue at $245.75 and then we are currently at $365.62. And as you can see over here, the actual versus forecasted, we were above on actual over forecasted, so that's really good. That means we brought in more than what we anticipated. That's what every company's goal is going to be. You're going to want to bring in more rather than less. And then same for operating income and net income. Right over here we did have more actual than forecasted. For the operating income, we started with 22.6 and ended with 43.11. And then net income is 13.56 all the way up to 25.86. So down here at the little graph you can see starting off we did have a sharp incline and then it kind of tapered off, but it did end up going up gradually and it never did drop back down. That's really good. You want to be able to have a really good first year, and I'm going to assume that's probably what this was right here, is sharp first year and then it kind of went down and leveled out a little bit before it started growing again. Just your first year boom in business. So right over here it's showing us that 200.65 was what was going on in production. So that's what the cash flow was. 235.82 was for retail, and then the smallest one was 79.63 going to licensing for all of our things. So right over here is telling you kind of a little bit about, so I replaced the assembly equipment at Sacramento facility. I did the EDI supplier software system, and then I did children's accessory line. This is going to be huge. Kids love to be like their favorite characters. So with doing that, I feel like that was part of the really big boom. Everybody loves that kind of thing. And then the doll houses with miniature dolls. So pretty well we're going to start off with the income statement and balance sheet. So starting off with the income statement, right here we're talking about the net sales. So as you can see from 2014 going on to 2015, it obviously increases quite a bit, going from 365 up to 394, and then so on and so forth. 2016 it gets better, and once you get all the way over to 2014 it's going up all the way to almost 640. That's a really good thing. It's meaning that the sales that I have invested in are continuing to grow and improving each year. That makes it a good thing because it means that I'm not going to have to worry about losses declining. So on this gross profit, we're also seeing kind of the same exact trend. Starting off at 2014, we're going from 225.48 all the way up to 420.15. That's really, really good thing. You want to be making money. That's what your business is there for. You don't want to have a loss. So in order to go from 225 to 420 in the course of 10 years is an awesome amount. And then the EBITDA, that is starting off at 66.89. So pretty well that's telling us that 66.89 going up to 79.63 to 83.04 all the way up to 140.34 is really, really good. So that interest before taxes and everything like that, that's showing you kind of what you're doing. And then depreciation, starting off at 2014, negative 16.10. You're obviously always going to have depreciation cost. It's very rare that you would ever find something where it's gone up, maybe other than the fact of land, your business land got better, but with depreciation it's going down from negative 16.10 to negative 17.74, all the way to negative 23.33. So gradually over time, that's just showing us that you are going to lose some value on some things. Depreciation is going to happen. There's really no way around that. So potentially after you've lost all depreciation, if you have to, you might have to buy new equipment or new things. However, you're not doing too bad on depreciation because it's a natural thing. So the big one is earnings before income taxes. So 43.11, you're gradually moving up each and every year, which is really good. You want to be able to be earning more money, and so from going from 43.11 all the way up to 104.9 in 2024, that's showing you that you're going up almost 60. So you're going to be earning a lot more. Your business is becoming more stabilized. You're kind of you're done introducing yourself. You've made a name for yourself, so people are going to be using it, either your product or your services. Taxes, whenever it comes to taxes, again, these are going to be things that you run into on a normal basis. You're always going to have them. So the current is negative 17.24. As you can see, it does go up a little bit every year. It looks like it's going up about 1 to 2 every single year. It does jump from 2021 to 2023 each year. It's going up by 3, and then again it's going up by about 3 in 2024. So this can be all different sorts of things. This could be anything from you've bought new equipment, or something where you have to pay additional taxes, or it's stating that you have bought land, just all different sorts of things, where you might have more taxes. You might have added on new stuff. So that's not necessarily a bad thing. It's just stating, hey, it is going up, but then again, it is going up, but your earnings are also going up before income taxes. So it kind of levels everything out. And then this is a really good one. So the net income right here, you're starting with 25.86 in 2014. You do a fairly large jump from the first year to the second year. You're going up about 7 from 2014 to 2015. So that means you had a really killer year your first year. You did really, really good. It kind of evens out after that first year, though. You're going from 32.34 to 34.33, and then as you can see, you just kind of level out. You're just going up 2 or 3, and then the last year, you're going up almost 6, so that's a really good year too. There might have been a new release of something or some kind of business proposition that you did to really intrigue your guest or your clients. So that net income, what you're bringing home after, going from 25.86 your first year all the way over to 62.94, that's a huge increase over 10 years. So that's something that you would still want to keep growing and keep continuing to go up, but that's a really good start. Okay, so now on to the balance sheet. You have got your net current assets. So these are going to be all the things that you own. So your inventory, your accounts receivable, your cash and cash investments. So pretty well what's going to happen is you're going to start off with 145.07 in 2014, and just like all the other numbers I've been showing, it's just going to gradually continue. So whatever businesses I've chosen, I did good on. You don't ever want to drop down, so it's continuously rising, which is what you want in a business aspect. It goes all the way from 145.07 to 265.01 in 2024. So you have quite literally almost doubled yourself in 10 years, which is phenomenal. Alrighty. Going down to total net assets, you've gotten from 288.32 all the way up to 463.7. Again, that's really, really good. This is going to be stuff like plants and equipment and property. That does include accumulated depreciation, and it also does include the gross amounts. But again, you're still rising, so you're still getting way more assets in, which is going to drive everything up, and it's going to make you better in the long run as a business. Liabilities coming down here. Your current liabilities are going to be things you can pay off in a year. It's going to start off at 62.09. You're going to go up to 71.49, 75.11. It keeps going on and on and on, all the way up to 124.78. So, you know, you might have things that you bought, again, that you might be able to pay off within the year. Current liabilities aren't necessarily a bad thing, but you are, as long as you get them paid off, you'll be totally fine. Okay, and then coming down here to total liabilities and shareholders' equity. So you're starting off in 2014 with 288.32, and as you can see, again, the trend, we just keep continuing to go upward. And in the end, we're at 463.7. This is really, really good. You want shareholders and stockholders to be on top of their game, and you want people to be investing in your company. That's going to mean you're going to get more things done. You're going to be able to invest in more and raise not only their value, but your value of the business as well. So all of these numbers were the reasons why I really went with all of the companies that I chose. I feel like I did a really good job at choosing which ones I felt like were going to be the best based off of NPV, IRR, payback period, EBITDA, all sorts of things. So those were my numbers. I did really good. Like I said, I ended with a 649, just a little above 649, and those were my numbers. Thanks.